Good evening, everybody, and welcome to another edition of Live Market Analysis. What a pleasure it is to be here with you today talking about markets, especially when our own market is finally making some new highs. We've got an 8 handle, 3 big up days in a row. Everything is going up, and it's all happy days. So, on that happy note, let me make sure the microphone is centered there. Let's get underway with, of course, the disclaimer, which says that everything we're going to discuss this evening is general in nature. It's not advice for you to rush out and action without serious and careful thought first. And even better, go out and seek the help of a financial professional to determine its appropriateness for you, because I've done none of those things. The other thing to remember, of course, is that trading, investing is risky. Markets go up, they might go down, they might not go the way you want them to. You could lose money. It's always important to remember that you make your decisions about your money, not me. So if something bad happens, that's your fault. Hey, if something good happens, it's probably my fault. Of course, the agenda for today is very simple, as it is every week. Send me your requests. It could be stocks or commodities or bonds or crypto, anything from the weird and wonderful world of finance, and I'll give you my best technical reader. Or, of course, you can ask me anything about trading. And actually, I think I've got a couple of trading relating questions for us offline as well. Let us head to the AMI broker screen while your requests are coming through. And let me make sure I've got that window over here. I can put out any bushfires as they arise. We're going to kick off with our portfolio management model. Now, it's a bit of this, and it's going to be a bit of the ASX 200 as well, because we've kind of come to the realization that we can't rely solely on the Nasdaq Composite Index. If you caught that, I did a really good article. Hey, I did a really good article during the week. It was about the Nasdaq, the Russell 2000, and how the way they influence our market has changed subtly over time, and that maybe the Nasdaq isn't the best model, the best way. There we go. There it is, right there. The Nasdaq rally is dead. Long live the bull market. It's tongue in cheek, of course. Don't worry, the Nasdaq rally isn't dead, but we had that big black candle we're going to talk about in a second. And what happened on that day was so amazing. And ladies and gentlemen, it's very rare you see what happened. Might have been Thursday, might have been Friday. We're going to talk about it, but it's special. If you're seeing this for the first time, you've seen something very, very special. Big black candle here, big black candle on the S&P 500. Let me maybe zoom that in a little bit. But we saw a big white candle, on the S&P ASX 200. But if I finally get to the point somewhere, we will find there was a big white candle, gap and run on the Russell 2000. Of course, it was the Russell 2000 companies. We know that much. Smaller companies. Now, the biggest company is quite big. It'd be number 8 in the ASX 200. So it's big. But they do fall away significantly from there. And the weighting, this is a really important chart here, table, because it shows you that the weighting of the top 10 stocks in the Russell 2000 on the left-hand side, and in the Nasdaq on the right-hand side, and the S&P 500 and the Nasdaq aren't all that different these days because there's a lot of overlap in those big stocks on the right. So you can see there's far less concentration in the Russell 2000 as well. And small caps, heart of corporate America, highly sensitive to rates, like the Nasdaq, and that's why I've always followed the Nasdaq, because you've got that sensitivity and you've got that breadth, okay? But the Russell probably better at the moment. We'll go read that article if you haven't read it. It's fascinating. Let me tell you, it's absolutely fascinating. Some incredible insights that you won't find anywhere else. But getting back to the point, there's the big black candle, and ordinarily, if you and I sat down together in front of a chart screen and started looking at charts, and you and I looked at that with our learned eyes, now my very learned eyes, and your newly learned eyes, we'd both look at each other and say, hey, guess what? Supply has finally arrived. And it had, and it did. And ordinarily, you and I would bang our heads together and we'd say, okay, probably time to reduce some risk. Based upon that, no more than a third, of course, because the overall trend is amazing. That's all, order of magnitude, that's what we're talking about. And even then, we're not rushing out and selling a third of our stocks that we've got. This is a portfolio management model, right? We might tighten stops up. Instead of soft stops, we might put some hard stops in. We might take some profits on things that maybe threw in a candle that we didn't really like all that much, but we're going to gradually try and move to 1/3 portfolio risk less than we had before. Why? Because if we saw that on a stock chart, we'd respond in much the same way, wouldn't we? So why wouldn't we then if this is the index and this is a representative of what everything's doing, why wouldn't we then do that in a portfolio management? But then we get to the Russell 2000 over here, and we see that on the same day, not only was it a big white candle, but there was a gap and run, and that is as bullish as you can possibly get. So no ways would we be looking to reduce our exposure. We'd be maintaining our exposure. So a little bit of common sense is required, but also a little bit of understanding about what is out there and how it all fits together. And we will find that if we look at the Russell 2000, let's quickly look at the S&P 500 because that looked more like the Nasdaq. But we go to the Aussie 200 and it looks a lot more like the Russell 2000. Hey, we've been saying this for weeks and weeks and months now. Then the Aussie 2000 looks like the Nasdaq because we don't have those big tech stocks. We've got a bunch of different ones, more like what the Russell has. So anyway, back to the point here. I can't see anything in any of these charts so far that would suggest that we need to do anything with our portfolios but maintain our FRP. And that's the whole point, really, of this beginning of the first few minutes of our presentation each day. And then I look for red flags. I look for things out there that might contradict this idea of having full risk position. Red flags, where do I like to go? Oh, look, we look at Europe, but not because really there's a red flag there. I mean, America's probably going to do what America's going to do. But there aren't any red flags to worry about there. Obviously, the French market having a bit of an issue with some elections that are going on. The DAX is fine. Even the UK is fine. Even after their elections, they went quite smoothly when you think about it. And the Spanish market is fine. Heading over to Asia, we've actually seen a little bit of a rally. So last couple of weeks, we're talking about how crappy the Shanghai composite was and the A50 shares over there. We said potentially making downtrends great again. Every time I think they're about to completely collapse, they do somehow manufacture a rally, and manufacturer being the operative word there. No red flags, that's the key. Nifty 50, isn't that doing amazing? And the Nikkei is also looking very, very good. And we're seeing that reflected back into some of our ETFs over here in Australia. Talking about Australia, as I said, no reason to be anything but FRP here with three wonderful white candles. The trend's obviously heading in the right direction. The price action is good now that we've broken through the 79.11. Oh, it's how wonderful it is to say those words. Ladies and gentlemen, we have broken through 79.11, which in theory now, 79.11 down to 78.39, sort of that old pink zone, in theory should be demand. And it's more, look, it should be more than theory, but it is, we really want to see it happen. So we're not, those words aren't flippant. We need to see any pullback into that zone met with white candles and or downward pointing shadows. We don't want to see black candles in that zone because that means the demand that I thought was there or should have been there isn't there. And that means something altogether different. I don't think there's anything so bad in the world, famous last words, and I don't want to bring anything on, that could bring this thing undone, or in the US. I mean, rates aren't about to go up exponentially. Rates are probably going to come down, you know. I mean, the only problem could be, a global recession. I think central banks will probably do their best to avert that at this stage. And there's plenty of fiscal stimulus still in the system as well. But we're talking fundamentals and we're talking about macro stuff here, and that's just my opinion. And you know what they say, opinions are like arseholes. Everybody's got one. What are we doing? Sectors here. Could I be bothered? Discretionary looks very, very good. Financials looks very, very good. I'll just tell you the ones that look very, very good. Gold looks very, very good. Healthcare looks very, very, very good. CSL, Cochlear, those things are definitely catching my attention. Technology still looks fine. I know we had that bit of a wobble there when the Nasdaq pulled back, but still good. I'm going to skip over resources deliberately because they don't look good. Property, I haven't looked at for a while. Actually, that's a big rally there in property. Surprising for me, actually. But it does make sense when... Well, it's surprising in that so many of those charts were cactus. Really, it was Goodman Group that was holding them up. But with rates coming down, I'll show you that chart in a second, that actually makes a lot of sense because this is an extremely, if not the most interest rate sensitive sector we have. Utilities, I was going to say looking very good, but no, that has pulled back. The Aussie dollar is still heading higher. I'm in the middle of writing an article about that. I'm going to put it on Livewire tomorrow. I can't put it on Market Index because my colleague, my partner in crime, Kerry, he did an article about it today, and that sort of stole my thunder because we ended up somehow noticing the same thing and writing. We can't obviously do the same thing, so I'll put it somewhere else. I'm still going to write it because, look, let's face it, my article's going to be better than his. Let's go to aluminium and let's go to the line chart there. Well, again, can't see it. Don't worry, it's coming. we're looking for red flags and or signs of coordinated global growth, because coordinated global growth, good for stocks. Red flags, these going down, not global coordinated growth, bad for stocks. That's not looking good. So this is finally, we're going to see some red flags. Copper's still fine, isn't it? I mean, this is an almighty big pullback, but we're starting to head back in the right direction. Not too bad. Iron ore is not great, but not collapsing either. And as a country, we don't need it to be $140 US a ton. 110 is pretty darn good, considering the government reckons it's going to be $80 in the long run. Okay, nickel, no, that one's cactus, but it's kind of cactus for its own reasons. Plenty of Indonesian supply continuing to flood the market. That's more the issue, I think, than demand at this stage. Lead, tin, and zinc, no red flags. That's kind of the point. Do we need to look at lithium? I haven't done the chart for today, just haven't had time, but I'll get that done before I turn in this evening. And that looks cactus, and the candle today was a bad one, I'm pretty sure. So nothing really to see there. We might have a look at gold over here. Looks great. I mean, that's a wonderful sort of base pattern that it's built, turning back up. I must admit, I had my doubts. I honestly thought that was going to roll over. I don't know if that was thinking or hoping it was going to roll over, because I do like to see gold bugs suffer, just between you and me. But no, that's looking quite good. Silver was looking good and had a bit of a pullback there, but nothing untoward, nothing too terrible, I think, that's going to derail that trend. I still think that's fine. Let's head over to the trading view screen now, and we just happened to kick off with Bitcoin. That's the default. We haven't talked about it for a few weeks. I think the last time we did, maybe 3 or 4 weeks ago, I might have said something along the lines of, like, it's too hard now, everybody, and let's give up and go to zero risk position. It went down. It's gone back up to, I think, roughly where I said that. So probably nothing gained or lost, but at least you wouldn't have had the stress. Do I think you need to have a position here? Look, I mean, at the most you would have a toe in the water, but I don't think you need to do anything more than that at this stage. Bitcoin has a history of turning off its worst looking juncture, and therefore you're closer to the worst looking juncture than you are to the top. So maybe that is helpful. Let's have a look at the bonds here, the all-important bond market, and I talked about the property sector and why that's been good. In fact, why the whole equities market, so plural, have been good. And we've seen a substantial breakdown here in US 2s. This is really the proxy for shorter term rates in the US. The 10s are the proxy for the longer term rates in the US. And we are talking about risk-free yields here, because Uncle Sam always pays his bills. And if the price of risk-free money is getting cheaper, it means that everything else seems less expensive. Okay, if you can earn risk-free 4.5%. Now just let that sink into your brain for a second. 4.5% risk-free. Not that long ago, it was 5%. 5% is a bloody good yield. If you go back 20, 30, 40 years, it's a good yield. Risk-free. Okay, and we're going to look at 10s in a while. It was, not that much different from that. But that's fantastic, and it makes stocks look a bit average. Now stocks are starting to look a bit better, and that obviously is good. And then there's an inflection point. I talked about it in tonight's evening wrap. If you read that, I talked about this inflection point. It's not a line or a level on the chart that you're going to see like ding, 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 we've inflected. But you will get to a point where if these drop too fast, too quickly, that's not good for stocks anymore. It's a bad thing, because the market is starting to price in a recession, and that's going to be bad for the stock market. So I think we're okay now. Don't worry, ding, ding, ding. I'll let you know when I think we've reached the inflection point. As I said, it'll be more of a feeling and just watching the relative candles. So if you're seeing black candles here, at the moment, black candles here and here are being reflected as white candles in the stock market. But if we see black candles here, big black candles here, and big black candles in the stock market, then we're in big trouble. We're not there yet, so we're okay. But to be forearmed is to be forewarned. And are we talking about, I guess we are talking about technical analysis and candlesticks, but still some of this is, it's still very much narrative, isn't it? It's narrative. It's my narrative, but my narrative is usually pretty solid, because it's not my first rodeo, ladies and gentlemen. These Aussie yields are actually surprising to me, coming down. All this talk that we're going to get a rate cut in August. We won't get a rate cut in August. Trust me, we won't. There's 0% chance of a rate cut in August. I don't care what anybody says. They won't do it. I don't care whether they should do it. That's none of my business. They won't. They're not going to rock the boat. They're going to just ride this one out a little bit longer. And what are the 2 years saying? They're coming off as well. So the market's starting to agree with my hunch. Looking for red flags. Well, that's okay. That's not a red flag. That's going up. That's good. Obviously, these are the banking indices over in the US, the ones that caused the mini flash crash from last year, I think it was. It's so easy to forget these things. Quickly on the Chinese property indices, well, that's the Hang Seng. That's the property index there. And look, they're not good. They're not good, but at least they're not completely bloody awful. Is there anything else to show you while we're here? I mean, we did look at silver on the other side, and it's not much different there. Obviously, these are the ones that might have some lines on them. If I click on this button and this button, the lines will appear. If I click that leave, and yes, here we go. And of course, as you know, TradingView defaults back to whatever you happen to have started off with, and that's Bitcoin. So gold here, and there's my lines. The clock, obviously 24.56 to 24.77. That's where the supply is. Watch for candles in there. White candles, there's no supply. We're fine. We go much higher. I put to you. Black candles, upper shadows there. There could be an issue. High-grade copper, we saw copper on the LME bouncing. I think this is okay. It could be better, but I think it's okay. That short-term trend ribbon now offering a bit of dynamic support. If we see another white candle, should be enough to get that momentum going again up to 470. Iron ore, always worth looking at. It's probably sideways. I know it looks awful, but it's probably more sideways than anything. Uranium is fairly flat towards the end, but we have talked about how important this next move is natural gas. And this is why I don't tell you to buy natural gas, because every time it looks good, it collapses, and it's done that again. Crude oils, plural, just hovering in a range. I don't think there's, there's really a desire to go one way or the other in a big way. Even if it broke through 83.72, where's it going to go? 75.85, the dark green ribbon. If it's going to go up, where's it going to go? 89.96. These are sideways things, but sometimes sideways is good. Benign is good for the stock market quite often. Benign is coal at the moment. And I think that's it. Let's head over to your offline requests. Going to head back to Amy Broker. Double check I don't have any emergencies over here in the online chat. And I don't think I do. It's all looks pretty much like requests to me. So we'll do those in a second. And we'll kick off with Sean, who's asking about Aristocrat Leisure. And I'll head over here. And, really nice trend, as you can see. Last time we looked at it over here, FRP was what I said. And, the FRP, this is very simple for me. We go copy, we go paste, and we put that there, and we go FRP. And you might say, it's looking a bit high. Mate, it's gone up a lot. If you've got it, if you don't got it, you say, well, I've missed that one. I'll wait for another one that hasn't gone up too much. And I think you're both wrong. I think it's not too high to buy because it is a picture of excess demand. It doesn't look like anybody wants to sell. Why don't they want to sell? Why are they all hanging onto their shares like they really don't want to let go of them, even though people are paying more money? It's like, well, they think there's more. They're not selling because they think they're going to get more. Why are people still buying? Are people still buying? Of course they're still buying. Why are they still buying? Because they still think there's more in it. So the demand side thinks it's going up. The supply side thinks it's going up. And if you are foolishly thinking it's too high or it can't go any higher, then you are in the minority. And that's what trend following is about, ladies and gentlemen, in a nutshell, is not being in that minority. FRP for me, no further comments required. On Whitehaven Coal, this question here from Brendan, should we take 1/3 now? 1, 2, 3, 4 pretty ugly candles. Look, you can. I don't think you need to. And I think, look, it's an ugly set of 4, but it's still pretty mild within the context of that rally. And you can see here we've drawn all this point of supply stuff in the past. It's probably going to be point of demand stuff in the future. We'll know within a candle or two. So if you want to wait for, I don't think you're only waiting for another couple of candles to find out that answer. It's probably worth waiting for. If you can't wait and you've had enough and you're a bit nervous, and or you're seeing, literally, to be fair, in those 4 candles, everything else in the market go up, and that's pissing you off, then you can sell a 1/3 here, because I don't think you're going to miss out until it might be a few more candles and you have to get back in, but that's your worst case scenario. Your best case scenario is you get on something good that's going now, and this probably does nothing. I mean, that's your worst case scenario. So your question is, do I take 1/3 now? As I said, I don't think you need to. See what happens in the MPOS zone and the light green zone. White candles, lower shadows, everything's hunky-dory. Black candles in there, then you're only giving up a bit more, I guess, to find out. I don't know if that's a definitive answer. I feel it's definitive enough, Brendan, but, what's the right word there? Ask me a follow-up. Send me an email if you like. Please send all the emails to carl@livemarketanalysis.com. Don't send. Some people send them to other places and Twitter, and I know I will get to them, but it's just easier if you just all send them to one place for me, please. Let's go to Craig, who's got CHN. Okay, very interesting. This is one which kind of started to look good for there for a while, isn't it? If I see this plus 1/3, I wonder what I meant there. Oh, okay. If I see this, well, okay, there you go. Okay, look, so what you can't see is this candle because it's been covered up by the trend ribbon there. Possibly since that's how long ago since we actually looked at this one. If I go Z order default, you can't see this, but if I bring it back to the front and put it trust me, that's where it was. But clearly what I was telling you was that if I see that candle, then that's when we can add the third as a turnaround play. We clearly didn't see that candle. Okay, I'll leave it there, but I think we know what was under it. There's kind of an indecision candle. That's what we got. We just didn't see that emphatic. Yes, we're ready to go. We saw actually quite a lot of indecision, and then worse than that, we saw this candle here, which is kind of saying no. This, with all of this impetus, all of this enthusiasm, all of this promise and hope, that is your death knell. That is like people. And I didn't draw that in. It's funny I draw those candles, don't I? Like if you see this black one, then panic. I didn't have to draw it in. The market gave you the black one and then you had to panic. And look at that. It never came back from that. That is a wall of supply, and it was just proved here. And interestingly here as well, I mean, we kind of started to go back up, and then I don't think we even got halfway up that major candle, that key candle there. Then we see another one. This is the death knell. This is worse than that one, to be fair. So there's really nothing to do here. So I'm not sure why Craig's asking about this one, unless he wants to go short. I can only assume that's why he's asking me. I don't think he wouldn't dare ask me about this one for a long. I think we've all learned that lesson, haven't we? But maybe he's asking me about it for a short. And I can see why you would short this one if you could borrow the stock, because if we go to my daily watch lists, which are also here, you can't see, in market index, and we go here, and when we scroll down, or in fact, if I just go Control F, CHN, I'm sure we're going to find Chalice Mining there in our featured downtrends lists. Okay, as in it's like, I think it's going down. So I don't think I need to comment any more on that, Craig. If you're asking me whether you can short that or not be in it, I think yes, absolutely, you can short it or not be in it. Let's go to the other one, which I'm kind of wondering now, Craig, why we're looking at these, unless because this is also in the downtrends list. It's definitely not an aggressive trade, because an aggressive trade needs at least some sort of basing pattern. Is that a basing pattern? I don't think so. What do you think so? I don't think so. We've seen basing patterns before on stuff I've called aggressive setups, and I don't think it is. Thank you. That's why, yep, there you go. That's why we turned the microphone on. That's Fortescue. Obviously, we looked at CHN. Is that a basing pattern? I don't think it is. Do you think it is? I don't think it is. I think it needs more of that. And in the absence of good price action and good candles. Look, don't get me wrong. I think it's probably stopped going down for the time being. Let me say that. It's probably stopped going down for the time being. But do I think it's going up? I don't think there's enough evidence there to put the probability on the side of me saying yes to that. So I'm a big pass on both of those for longs, but you never know for shorts on the next big black candle or long upper shadow. Roscoe's got SUM, and there was more of a comment. It said, told you so, as in I told you so about getting out. I think I might have said FRP or zero risk position at some stage, he said, and it's gone down from there. Somebody tweeted at me and said this was a big rug pull. And I know what a rug pull is, but I don't know how it applies to Summit Minerals. But I'm guessing maybe there was some unscrupulous activity there from the company, getting people's hopes up and then not delivering on that. And I do have a comment on that concept, and that is fine. Don't fear that. Embrace that. If a company wants to ramp something, go with the flow. Happy days. But we also have this insulation, don't we? There's this blanket we wrap ourselves in, this ability to get ourselves out of trouble if we need to. And if we're seeing black candles, if they get too big and they get a bit too ugly, like those two, that would be concerning for me. That third one there is concerning. That one's certainly, as it was closing beneath there, I said we were going to get out some, and then 100% not holding any from there. Maybe there were some other signals before that, and also 50 cents working. Anyway, look, these are all things we've discussed in the past. I don't want to go on any more about it, but to say, okay, Roscoe, just acknowledging your message, and I'm glad that you were able to use some of your learnings to extricate yourself from that situation. And that's it for your offline requests in Australia. I'm going to head to your online requests, and we'll do all the USA ones later. And we've got Perry with a couple of ASX stocks. I know Perry is all over Droneshield. I'm sure he owns it. I'm sure he's had it for a while. I'm sure he hasn't been doing anything but continuing to own it. And that is obviously looking very, very good. I might zoom normal here. We've got a lot of stuff going on. And what do we say here? I might even have, I'm getting confused because I know these black candles don't exist, and you can see I've drawn them in. Look at that. That's why I'm getting so confused. Okay, what the flip is going on here? Because I know that didn't happen. Okay, what I would have done there, as I said, if you see the black candles, that's when you might want to take some risk off the table, and it doesn't look like we saw them. Certainly that is not qualifying as something we need to be too concerned about. I'm concerned there, but I'm waiting for another candle, and I got it and I was fine. So FRP all the way through here. There's nothing that buys through here, and I can certainly copy and paste that over here, and on top of that go plus 1/3. Because I can't see any reason why you wouldn't buy some more. But Carl, look, the only thing here that concerns me is its distance from the light green zone, and that concerns me because it's, we know, don't take my word from it, you've used these ribbons long enough to know that eventually there's a mean reversion. So eventually there will be a mean reversion, but the signal is so strong here. I can't see why you wouldn't add some more at this stage. If you're adding for the first time, just add a little bit and see what happens. That's all I can say. It's perfect. I can't fault it in any way because it just keeps getting better and better. Now, just on a point of order, I know I'm jumping around a little bit here, but I think this is important point to make on it. It's about technical analysis. And somebody messaged me because I wrote today, it's the perfect chart, picture of excess demand, full risk position, and then somebody said to that, am I saying it's a buy? Well, I think you can read between the lines, but obviously I did explicitly call it a buy in another tweet. This one here, Tora-esque. I hope Tora-esque is listening, because turn your microphone and we'll debate it. But this exhaustion gap. And I think maybe more asking a question than sort of telling me. But this idea of an exhaustion gap, let's just go back to this chart, because I think it's a really important point. And the point is this: you're going to read a lot of stupid shit in textbooks and on the internet about technical analysis. That's the technical term we apply to terms like exhaustion gap. It's stupid shit. So what is this idea of an exhaustion gap? Certainly it's gapped up. Certainly it's gone the hell up in a great big hurry. But who's exhausted here? And what I said in the tweet was, okay, stop looking at stuff you read on the internet for free or in a textbook for $29.95 and thinking that shit's gospel, okay? Quite often it's been copied and pasted from somewhere else, or it's been copied and pasted from somebody that never really thought about it that much, and the person who copied and pasted it didn't think about it that much either. And what I said in the reply to that response was, just think of it this way: if you can't relate the technical analysis concept back to demand and supply, then there's no basis for that concept at all, okay? And you've heard my arguments about the RSI on Twitter as well. But with this idea of this exhaustion gap, and I'm going to talk about the hanging man doji in a second, I said, who's exhausted? Okay, so relating it back to demand and supply, and it's not just for this, it's for everything. This is the lesson. Who's exhausted? Is the demand side exhausted? Does the demand side look exhausted there to you? It gapped up. You can't get a gap if the demand side's exhausted. You can only get a gap if the demand side's got plenty of energy. Is the supply side exhausted? And maybe that's what you could argue. So if you could argue the supply side's exhausted, like they just can't supply anymore. The supply is exhausted. Then maybe you can argue that it's an exhaustion gap. But I think that's contradictory to what the term actually means. So again, always relate it back to demand and supply. There's no such thing as an exhaustion gap, ladies and gentlemen. The other one is the hanging man doji. Maybe that's not a great example, but it does illustrate the concept that if you get a technical analysis textbook, and some of these candlestick books have the word secret on it. Trust me, ladies and gentlemen, always be skeptical of a book that has the word secret on it. That's you can buy for $29.95 on the shelf. There is one exception though, and you know what it is. Let me find the hanging man doji, a really good one at the top of a trend. I probably won't find one because they're probably very rare. I might just have to draw it, right? Because I'm not finding a great example. But let's say we had something at the top of a trend that looked like this. And come on, don't worry, I'll pick up the pace. I always say that, don't I? I'll pick up the pace. Let's do this, and do this, because this is what the hanging man doji looks like. Or actually, that could be black, to be fair. But it could also be white. And let's turn that to black. But a candle, why did that not change? A candle that looks like that at the top of a trend. Let's make it wider so it's more symmetrical. So if we saw that up here, right, for example, or up here next, people would say, oh, that's a hanging man doji. Hanging man, that can't be good, right? The man, he's hanging, he's got to be dead. Right? That's got to be bad. You just didn't think about demand and supply. This lower shadow can only occur is if there was supply. Yes, there was supply at the start of the trading session, but it was absolutely obliterated by demand. So no, that's not a bearish candle. It never is a bearish candle. It can never be a bearish candle. Oh, but sometimes, Carl. No, that's never a bearish candle. And even if we turn it into this, right? Even if we turn on this, that's still not a bearish candle. It's not as bullish as the other one, but it sure as hell ain't bearish either. Why? Because that line can only occur if there's a whole heap of demand in the system. So my point is, there's a bunch of stuff out there that it's not good, it's not bad, it just is. It's just information, and you need to filter it, through your filtration system of demand and supply. If I'm not around, if I'm around, just ask me. Don't worry, I'll filter it. I think people often call that the bullshit filter too, don't they? Let's go to Perry's second one, which is JAT, which also looks very good. Now, I must admit, I haven't seen this one in any of my scans, Perry, because as you know, I do use a turnover filter that requires it to trade $200,000 on average per day of last month. And it's an arbitrary number. I could really pick any, but I do have to pick a number because if I'm putting out my daily watch list scans and everybody jumps on, I kind of need a minimum amount of liquidity not to blow the thing up. And that's also why I put lots of nice charts out there too. I don't want to just put one or two because that would be a recipe for disaster. So it doesn't make it good or bad if it's not in my list. It just means it didn't meet that filter. And things can be very, very good with very low turnover. There's very low turnover and it's going up because there's just no supply. There's plenty of demand around, but there's just no supply. And this is the other piece of bullshit that you read in technical analysis books, of course, is that things should go up with lots of volume. And if they go down on a little bit of volume, that's good news. Or if they're only going up on a little bit of volume, that's bad news. Of course, we know that's bullshit too. Things that go up on as little a volume as possible are the best because always bring it back to demand supply. It's going up, there's lots of demand, there's no volume, it means there's no supply. No supply is a good thing, right? Can't ever be a bad thing. Volume appears, that's a bad thing. Something bad just happened. There's nothing bad here. I can't see anything in here that would suggest to me that I couldn't buy it. Oh, as you know, I like to hit the W there and look out the corner of my left eye and see if there's anything that could impede its progress in the near term. Look, there's a little bit of a level there. There's a bit of a level there. I don't think any of those are anything to worry about. They're quite old as well. So when I go back here, I'm pretty happy. There's nothing in the chart I don't like. So let us write on it FRP plus 1/3 and keep moving, I suggest. Thank you for those two, Perry. Let's go to Amber saying crypto's looking interesting again. Well, crypto's a very broad church, Amber. So yeah, is Bitcoin looking interesting again? I think that's the right word for it. It's looking interesting. Is it looking good? I'm not so sure. It's that good and interesting. They're a little bit confusing, aren't they? Those two terms. They don't necessarily complement each other. Let's have a look at Ethereum and Ripple. Let's do that. Let's go to Ethereum. Yeah, I agree. Look, interesting. The long-term trend ribbon has come into play. It's doing its job. I'm going to say not so well, or not as well as it did through here. Obviously through here, did an amazing job. Look, how good are my ribbons? Here, it's doing a good job, but my ribbons aren't perfect either. And look, we're kind of holding this zone. And that's good too. At least we've got a line in the sand. Hey, if we start trading beneath this area here, it's in big, big trouble, like cactus territory. As long as we're above there, we're okay. And I think that's as complicated as we need to make it. I would be more confident adding some risk. Remember I said on Bitcoin, you could if you wanted to, but not that confident right now. I would get more confident if we saw a DINK. So the DINK we want to see, if we go to the path tool, is something, I know it's counterintuitive. I can't want to see it go down so you can get more confident. I do want to see, because all we've had here is demand, 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 demand. I want to see, I know there's supply, right? So demand, 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 demand. Okay, yeah, okay. I can see you're there, demand. You're doing a pretty good job. Not a great job. I mean, look at, in the context of this downtrend, it's a good job. But I know there's supply around. How do I know there's supply around? Well, how did I get here in the first place, right? So I want to see how supply responds to this rally, and then I want to see how demand responds to that supply. And that's why I want the DINK. So if I can get the DINK and it looks like that, that's telling me, you know what? Actually, demand has got some legs, or it's got some guts to it. And supply's not as strong, actually, as that other broader trend is making out. We're still short-term downtrend on the trend ribbon. Don't ignore the trend ribbon. And of course, if we can do it at that point, we're also seeing that those ribbons are starting to act as dynamic demand. Is there a reason for that? There's no reason for that. It's pure coincidence when it happens, ladies and gentlemen. It makes me feel better if that's enough of an explanation for you. Okay, it just makes me feel better when it happens. And if that happened, then I would feel better about Ethereum. And then I could quite happily add some risk, because I'm still pretty close to the bottom of that pullback. I'm not buying at the top, and crypto's hard to buy at the top because there's the rug pull is always around the corner. Let's go to the other one Amber's got, which is Ripple XRP down here. I haven't looked at this one for a little while. I haven't needed to. I still own some Ethereum. I don't own Ripple, I must admit. Never got converted, Amber, to that train of thought. I like the last rally. I like big white candles. I like sharp rallies. And again, I would say the same sort of thing. A DINK would be welcome here. Anything to suggest that the demand side is still very strong and the supply side has lost control. And it would happen at the right place. You can see how well my trend ribbon here is impeding that upward price action. So any sort of DINK here, white candle, a couple of white candles after any sort of black one. Is this little black one enough? Probably not. Let's see a little bit of a pullback, a lower high and a lower low, and then the next white candle after that, or lower shadow. And then I could add some risk to either of those. But I'm just a wait and see for the time being. A nice little foray, Amber, thank you, into the wonderful world of crypto. Let's go back to boring old stocks, and even more boring, we're going to do stocks on the ASX again. And we're going to head over to Flight Centre, which, I completely got this wrong. Because I think around here, or maybe around here, don't quote me, maybe here, I don't know, somewhere around there, I was calling a short. I had it in my downtrends list. I had it downtrends list, downtrends list, downtrends list. And then around about sort of here, I'd say it stopped being in, definitely. But you would have been able to figure it out yourself, reducing risk on that short, and probably all out of your short by here, certainly not having any after the end of that day. And then I ran it as a long, funnily enough, and that's how trend following works. So, really, from here, short, neutral, maybe aggressive, maybe turnaround, definitely looking like a turnaround there. And then I felt on this day and this day, got away from me a little bit. And guess what I wanted after it got away from me a little bit? I wanted the great little segue. What did I want? Type it in. What did I want from here? And I'm pretty sure I put it on that day. So that's the first point where I was comfortable to put it back in the uptrends list for you. And I might have run it as a feature chart on that day, I think, or on that day. I don't know. I'll have to run it today. So that's just a nice little segue from what we talked about before with the DINK to this, because that's the value of the DINK. and this is the perfect scenario to discuss it in, and transitioning from something that was a short to being back to neutral to potentially going long again. And it actually happened in a very short space of time. Fascinating. So for you on this one, Robert, is FRP. I forgot what I was going to do there, but I should know. FRP plus 1/3, and really from this candle here, I would have been happy with it. Let's go to NAB, which this has been in the list for a very, very long time, and still FRP. I can't go plus 1/3 just on that last candle because it's got an upper shadow, and that would eliminate it from consideration today. But don't forget, your job as a technical analyst is to run your scans every day and shortlist, do your tradecraft. You're going to see this tomorrow. If it requires an entry tomorrow, you'll see it. And if it doesn't, then you wait till the next day because you're going to see it on that day as well. So FRP is all I can write on this one. Not plus 1/3 at this stage, but certainly happy to hold what we have got. And my computer is catching up there. Hopefully we are still transmitting on all cylinders. Let's go to Bio, which I was going to say is hoping had a good day today. I haven't done a lot of looking at the market today, and I haven't done my scans for tomorrow. So that's why I was hopeful, given its pedigree. It was having a good day today, but they're not going to go up every day. And then you just have to ask yourself the question: well, what do I do today? Is this a minus 1/3, or is it still an FRP? I think Robert knows the answer to that question. He's been tuning in long enough to be able to do this himself. But not that I'm saying, Robert, you have to do it yourself. Keep tuning in. Don't worry. Keep asking me the question. It's always a pleasure to answer it. I don't mean it in that way, but I mean you know what to do. And I don't think we have to do anything, Robert. And this lower shadow saved it for me, but it's not a good candle. I'm concerned. I'm attentive now. I'm going to do my job as a trader on a trade that I have in my portfolio and come back and check it tomorrow. And I'll probably know tomorrow. I don't want to see it close beneath this candle now because that's where the demand came in today. It's also where there should be plenty of demand from the past. Closing black candle beneath that level is not a good sign. If you wanted to, and only if you wanted to, you could give it a little bit more room because there's a little trough there. And that's the rule we have. We have a rule that, black candle closed beneath the last trough. That's it. Minus 1/3. Don't ask questions. I'll give you another alternative, but I'm not changing the rules here. You could if you wanted to. So this is only, black candle, obviously, closing. So what do we say? Black candle, low, close. Minus 1/3 beneath that level. And then you might want to do the second third on it. Black candle, low, close beneath that one. At least now you've got a path to getting out 2/3 instead of just 1/3. And you might then hold on to the last third until we get down here, or depending on how you feel, because you and remember, I don't teach you a black box system. It's like, well, a lot of it's, well, how do I feel? Could I be bothered waiting for this one to turn around eventually with that last third, or do you want to put that third on something better potentially? Okay, you've probably seen enough of my system to know that it's very much about a good time and not a long time. So to the letter of the law, is that the right phrase? Minus 1/3. At least we know, by doing that, at least we know that's our last resort. Okay, and that's always a good thing psychologically to have in our minds. Look, I'm out of there. Past that, like that is the last line. I will not tolerate anything after that. So that, just mapping out your trade and just knowing where you want to get out, so that when these things happen, you're not thinking on the spot, and then you're not going to not do it. You know what I mean? Because if you've got it in writing somewhere, like you'll be able to hold yourself to it. You look back and go, well, I put it down in writing and I didn't follow the rules clearly, right? I'm a very naughty person. Or it's in writing, I have to follow the rules, it's there, otherwise who am I trying to kid? Let us go to Avant, who's got BIO, coincidentally Avant, so that's very handy for me because I don't have to talk about that one now, because I just did. And we'll go to Nanosonics, which popped up today, obviously, but I did see it come up as one of the biggest gainers today when I do my biggest gainers and biggest losses list in the evening wrap. So there was some news today. I think there was some FY24 guidance, obviously better than expected. Not enough for me there's not enough there yet to say that the trend has changed, but it's not far away from it. Remember we talked about Fortescue, and I said I don't think there's enough of a base pattern there. What do you think? Rhetorical question. And I guess the the natural question to ask after that statement is, well, Carl, show me what you think is a good base pattern. And I actually think this is a good base pattern. I think this is actually a great base pattern. Look how long it's gone for. And there you go. Remember, hey, write it down, everybody. Base patterns have to go for 136 days.
If you think it could be serious, ask me to call emergency services or someone you trust.
Shut up, Siri. I don't know what Siri thought I said, but I was talking about base patterns. Maybe that's what got Siri so excited. But it'd be stupid for me to say, hey, everybody, wait 136 days for a base pattern to be valid. You know, I think we can. If I show you enough charts, hopefully you learn. Okay, I think Carl would say that's valid. I think that's valid. We also then need to see high peaks and high troughs. I'm not sure we actually saw it through here. To be fair, I think that's just all one uptrend move. But it's going to end up in the same place. What do I need to see, everybody? A little bit of a dink. And then I could certainly consider it. But it won't be an aggressive trade then. I think the aggressive trade is past us. It's now more of a turnaround trade. So it's a no for me right now. It's a zero risk proposition, but certainly it's on the radar. I love turnaround plays. I'll be all over this one when it prints a white candle and or nice long lower shadow on that dink in that zone. And then I could happily look at it then. But just keep an eye on it for now. TTT, which I learned when we learned last week, we have to go to TTM for this one. Try again. TTM, and then we go to TTT because Amy Broker won't let me type all 3 letters in. What did I say last time? I can't remember. We definitely looked at last week. Maybe it was this big black candle, and I might have said something like, probably the party's over for now. So exiting a third. If you got in a third, there's probably no point. Yeah, just exit it all at once, I think is what I said. I don't think you're too unhappy about that decision right now. And just waiting and watching for another nice signal. There is some supply up here. It's pretty clear. I mean, do you need me to spell it out for you? There's some supply up there, and I think we should be should pay that the respect it deserves. And then if we saw something kind of like this, maybe like this, we could start to get more interested. And a nice white candle close, white candle high close in and around that zone. I don't need it to break out. I just need to get close. And I reckon that candle actually looks about right to me. And let me change that to what it would actually look like, which is a white outline and a black outline and a white body. So, that candle there, and then we go if then plus 1/3, I think if we saw that. But look, if you've got it, if you didn't get out and you've got it, today's candle is a good one. So happy to hold what you do have. If you didn't, then I'm speaking to you about what I'd like to see from here to get back in. Let's go to Monica, who's got EZZ, which there you go. So Biome didn't turn out today. And this shows the importance of spreading your risk, ladies and gentlemen. Each morning, I should say. Look, each night I do the work for you. Each next morning it gets published. And having a little bit on a lot of positions, you might not have been happy with your Biome results today, but you would have been happy with this one. And this one's done, I'm going to say, tremendously well since I put it in maybe down here, but certainly we talked about it here. Maybe I put it in earlier, I don't know. And I don't think I don't think Monica's confused when she's asking me this question. I think she just wants me to say this. Am I right, Monica? All you want me to do is just go copy paste, and then you feel better about hanging on, because I know you know that you need to hang on to that one because it looks amazing. Would I buy some of this with my own money tomorrow? I would happily do it. Okay. Would I be annoyed if the next day it printed a big black candle? Of course I would be annoyed. I'm human. I have emotions, but I would know what to do, and I would do it, and I would just move the hell on to the next one, because that is the game we're playing here. It's just a game. Oh, but Carl, investing is serious. It's really important because I went to university for 5 years. I've got half an alphabet, or did I start to sound a little bit South African there? That was a faux pas. I've got half an alphabet after my name on my business card. And I heard about this guy. He's called Warren Buffett, and he's got billions of dollars. And therefore, because you need to be really smart to trade shares. Smart's not smart. Be really, really smart, and therefore it's really serious. You know what? It's not that serious, right? Just get in when it's going up and then get out when it's not. Let's go to the next one, which is DTL. I think it looks fine, which is good because I think last time we talked about it, I might have said plus worth 1/3, and it's been really crap since then. It's been coming up on my scans. It's been a real disappointment. Every time I set my scans, I go, oh God. But it's still coming up. I just can't run it because it hasn't looked good enough since then to run it again. I don't think it looks good enough to run it today, as in it won't go in my shortlist tomorrow, but it's not far away from it. It's actually very close. So that, if you've got it, the good news is we're still FRP. I'm not adding a third on this candle, but I reckon next white candle, high close plus 1/3 would be okay on this one. So let's do that. And keep moving. It's fine if you've got it. If you don't have it, needs a little bit more work. It's a turnaround play, needs a bit more cooking. Let's go to the next one, which is these ones for Peter. Peter's got FND. FND, yes. I don't think you want ASX. I think you're saying these are on the ASX. Wonderful, no complaints. Look, geez, it's close to $5, isn't it? Look how close this thing is $5, and look how unafraid of $5 it is. I wonder if it got to within my, what did I say, 0.5% rule over here, which if I can get the right thing, high there, 493, not quite. It probably might have even tickled that today. I know you've heard me say in the past, look, if it gets to the round number, within 0.5% of the round number, take a little bit off the table. I don't think you need to this time around, actually, because it's been there. That's more for if we're getting there the first time. We've been up there, we've consolidated. $5 is not a big surprise now. So I know it got to 490 today. If it gets to 497 tomorrow, you don't have to take any off the table. I think you're fine. So happy holder, no complaints, FRP. If I didn't have it, could I buy it on that last candle? I'd like a better candle, but it's not a bad candle at all. I think it's that's fine. Yeah, I mean, I could type I definitely will type FRP. I could type 1/3, but I think we'll find there's going to be better candles out there, more compelling candles than this one. But still, that will make my shortlist for tomorrow, to put it into perspective. Peter, I'll get to US one on the way back. What's the time? Don't type any more in, please. No more ASX ones. Haraju, you're the last person. I need to remember that, just to keep us on time today. CWP, which is a property trust, if I'm not mistaken, and I will type it in correctly soon. Cedar Woods, let's go zoom normal. I think it looks okay. I think it can go up. I nearly said will. I think it can go up, but I think even if it does go up, it's going to be a really hard grind. And I say that because you look at here, it went up, but it was a really, really tough grind. And look, it's just a turnaround play. The price action's gone back to high peaks and high troughs. We've got a predominance of white candles, nice lower shadow. Today's candle is fantastic. But you can see there's not a lot of volume here. There's not a lot of interest really going on. And that's probably why it chops and changes so much. So it's more of one of those, I think maybe if you had it or it's in your super fund or whatever, I think you can be more comfortable owning it now. But I'm going to put to you that we're going to find better stuff than this throughout the course of the day. But if this is the one you like, I don't know, you'd Cedar Woods, you've got some affinity with them, then I don't mind it. I'm not going to go so far as to say I would add a third, because I wouldn't, okay? But, if you're that way inclined, then you could add a third. And that one was for, I don't know, King asked that one there. Let's go to, I missed you, Adonis, AMI, Aurelia Metals still looks good, no complaints. And we talked about Cedar Woods and how that was a bit of a trudge and a bit of a, bit of a trek. And this is the same. You can see that the leopard very rarely changes its spots, and this is moving now in the same fashion that it did back here, only we're just trundling up to the next level, and that might be 25.5 or 26 cents or 27 cents or whatever it might be, but that's it. And I think you can own it and still be in it. I wouldn't put a plus 1/3 on it just on the basis of the last candle isn't good enough to warrant that. I don't think there's enough of a desire or demand or need to do that right now. So happy holder FRP, but I don't think I'm going to write the plus 1/3 on there today. So let's just put that on there and keep going. Thank you, Adonis. But if you've got it, then I think you're a happy holder. Let's go. King saying it's a good WA company, Cedar Wood. It is. They do a bunch of property developments around here. Hopefully, nothing of the methodology or the strategy that lifestyle communities use. I was listening to that on the radio this morning. That's a bit of a stuff up over there, isn't it? Jeremy's got biotech stocks at BOT still looking very, very good. Looks great today. That's going to go on my list for tomorrow. It's been all over the list for the last few weeks. I don't think there's anything so sinister there. I hope, Jeremy, you agree there was nothing really awful there to worry us too much. And FRP plus 1/3, happy with that one, because today's last candle certainly allows me to do so. So no complaints there, happy holder. It looks great. Let's go to DXB, which is Dimerix. That one I think has had some reason in the pullback, because comparing and contrasting, we're not above the short-term trend ribbon. We really should be. This candle here is quite decisive. These two candles blend those together. I don't think those two candles are enough to push us out of a trade, because the trend up to that point is just so darn strong, but that candle is. I really think we've got some problems on that candle, because those two candles are not enough in themselves, but when they're confirmed by this candle here, that for me is a do not pass go, do not collect $200. I think we have to act on that candle. So getting out some time during the day there, or at the close of business on that day. That's when I like to get out, just in the last 10, 15 minutes of trading. Just have a quick look at my positions, see where they're at, see what the candles are looking like. Yes, I know they might change in the last 10 minutes from the cross, but I take that on the chin and say, no, look, I'd rather get out this morning than try and get out in the hullabaloo the next morning, when all the other technical traders that are looking for that signal try and get out. You know what I mean? So that's the signal there, and probably you've got the fee. You actually closed, to be fair. You actually closed. This is all stuff I've taught you. I'm not just making this stuff up. So we've actually closed on this candle beneath the trough there. No other troughs in the way, so certainly that's a -1/3. And I'm thinking this candle here is a bit ho-hum, and that even there would be a signal. And look, I think when you're not bouncing in the light green zone, you've got problems. But even if you didn't do that one, then certainly you've got no reason to be in it there. So don't get me wrong, that's a good candle. The demand kicked in. It kicked in way lower than I would have liked. That's a good candle. That's an okay candle. So look, it's coming back, but I don't think it warrants any risk on this one just at this stage. So I'm going to be zero risk position on this right now. What would make it warrant some risk? What would make it warrant some risk? Give me a couple more white candles, a nice lower shadow. We've got a peak here. I guess we are making higher peaks. Look, maybe just another trough. Just get me above that short-term trend ribbon and show me that it's now dynamic demand, not dynamic resistance. Because right now, if it's 50-50. It's 50-50 whether that's demand or resistance, that short-term trend. Let's go to TLX, which I'm sure is looking good. It still is. Not the greatest of candles today, but not enough to push me out of this trade at all. So FRP, happily on that one, but obviously not adding risk on the basis of that last candle. And CU6, which is fine today. Obviously, I put it in a couple of times recently, certainly put it on that day, would have put it on that day, and today it's fine. It's an FRP. I don't think today's candle's quite strong enough. It's very, very close. If it closed even just a few cents higher, it would have gone. But let's go FRP. I think you've probably got enough of it at this stage without another confirmation signal. So happy holder there for you, Jeremy. Let's go to James. Actually, James has got US ones. We'll do yours in a second. Thankfully, Peter's asking about CU6, so I don't have to do that again. That's very handy. Michael's got HMC. This is the property trust, HMC, which is looking good, actually. So this is the one that kind of looks like a Goodman Group. I'm pretty sure it's a property trust. Is it not? Maybe I've got it completely wrong. Maybe I'm getting confused with Homeco, which does look bad. But this was in my list not that long ago, and I think it's very, very good. A little bit of a concern here. I reckon I might have been pushed out of a third. In fact, I definitely would have been pushed out of a third there. So happily holding 2/3, happily holding what you've got left. No complaints. Would I add another third on this candle here? Yes, I don't see why not. I don't like this. This concerns me. I'm still concerned by it. But it's come back pretty well. And this is obviously a point of supply. How do I know this is a point of supply? Well, look at the supply that came out from there. But I don't think we're too concerned about it. I mean, that last candle is showing us that, we're actually okay with what that represents. So definitely FRP. I mean, that is a lock. I can definitely say that. The question is whether I'm going to go plus 1/3. Look, I don't mind it. I can do it. I would cover my assets by saying, look, if it's the best thing you can find today, okay? And let's keep looking to see if it is. Let's go, therefore, to LYL, which we know is also doing very well. What did we say last time? Substantial amount of latent supply in the system here. Okay, well, that's not mincing words or phrases, is it? What did we want here? We wanted all sorts of white candles. To be fair, that we didn't get. Look at these. We didn't really even get it there. We probably got it here. Well, that's not too bad. FRP, this is not enough here for me to be concerned about anything. Obviously, I don't want to see stuff like this. Don't want to see that sort of stuff. That would be bad. But happy holder here. And the other thing to note here is that it's not a big surprise, right? We're getting some supply side candles exactly where we expect to get them. Okay, because so yeah, I think we're okay. If they were occurring somewhere mysterious, maybe I might be more concerned. But even then, they're not. They're pretty small in the context of this rally. So happy to hold on that one. Let's go to PME. Now there's some problems here. Okay, so I think we've got some problems here, and there you go. We can see that I've drawn in the past maybe a -1/3 there after that candle occurred, 1st of July, which is a Monday. Okay, so yes, we're definitely online. Yes, we're definitely online. We definitely had the benefit of that candle. So there you go. I think that's a pretty darn good call from me. -1/3 there. I think you know what to do here. So we said 1/3 on that day, and then we said 2/3 remaining. Well, we're not 2/3 remaining anymore. We're 1/3 remaining now, because you all know what you would have to do on that day. And even if you got out at the bottom of that candle, and now it's going back up a bit, I don't think you'd be fretting because, let's face it, you would have Medicus for a long time. But that's not the way we think anyway. We don't think in terms of, well, I got out there and now it's here. We think, well, I got out there because I had to get out there. That's my job. I just did my job. And doing my job is never wrong, because that's my job. I've got to do my job. And who cares where it is now? What do I have to do? I've got to do my job now. Okay, look at the chart, do your job. So we're okay now. We don't have to do our job just yet. And really what I'm talking about is, well, where's this going to come out? And certainly, certainly there, but that's too obvious, isn't it? Look, there's not a black box system. So I can do that arrow, and I can say, well, if you're a bit more, you want to give it a bit more room, right? So we'll go here. We'll write this. We'll make this say -1/3. In brackets, give it a bit more room, okay? Or you don't want to give it as much room, then you would -1/3 on a close beneath. Of course, we're talking about the low of the particular candle, close beneath there. If I want to give it a bit less room, okay? It's up to you. Hey, what's right, what's wrong? There's no right or wrong. Some people might want to give it a bit more room. But at least we know where that final point is, where we're going to get out. And I hope Medicus goes to $200, but honestly, I don't care if it does. I don't care if it goes to $2 either. I'll either be on it or I won't be on it. But that is a great case study, Michael. I'm glad you brought that one up. Let's go to CYL. There you go. So that's the day, it's going to happen. It's going to happen. We're going to get these days. Is it enough to push us out of 1/3? Has it happened at any big major round number? Has it happened at any big major points of supply? Not really. Not any clear ones. If I drew an arrow from here, because I do think that is an important point of supply, but really, it is kind of lining up pretty well with that, isn't it? I was going to say, it's a bit old, it's no big deal. Well, anyway, it's a coincidence. It just happens to be like literally the same price. The market Market has a memory. That's what I contend. That low there is 170, and what's today's high? 170. Okay, it's pure coincidence. Don't think it's anything but anyway, there's a bit of a supply zone there. Look, we're grappling with this idea, and don't beat yourself up about it. If you're thinking, hey, look, I want to get the hell out of 1/3 because I feel like it, you're not wrong, okay? Because you've got a methodology for getting back in if you need to. That's your worst case scenario. That's you. If you're feeling that way, I can see why, but I don't think you need to. I think you're being a bit pedantic, and I'm going to go FRP here. Obviously, we're not adding a third because of what the candle is. If that candle gets worse, like another big black candle to confirm it, I'd be more inclined to acting then, but it's going to be a case-by-case basis. And I've got absolute confidence in you lot now that you are sensible enough. This is a common sense system, isn't it? It's not a black box system. And I know you've got enough common sense to work these things out. Michael, different Michael. SKS, which is looking amazing. A little bit of an upper shadow today. Nothing to be worried about, I reckon. You know, I know you're worried about it, but you go, oh, Carl, I was watching it this morning and I was trading at $1.64 and I was thinking, oh, maybe I should get out some. And I remember that you told me to hang on, so I hung on, and then it closed at $1.58. Oh, you bastard, I should have got out. I still think it looks fine. You know what I'm going to say. Hey, you do you. If you want to chicken out of these things, you can chicken out of these things. But I'm a FRP. I don't think there's enough in it to tell me to get out just yet. So happy holder there. Would I buy it? No, I wouldn't buy it because of that big upper shadow. But there's enough in it to hold it. I feel that's the way I operate. Let's go. We won't go to EZZ because we've done that one. We know that one is looking very, very good. Probably the best looking chart we've seen today. Perry's got some US stocks. We'll do those later. Oh, I'm exhausted already. People did put things in after the last ASX one. Aren't you naughty? HMC is the parent company of Homeco and Healthco. Isn't that interesting? Because I'm pretty sure those two property trusts look pretty terrible, Michael, but actually the parent company, which gets all the fees, that's the one that looks good. Isn't that hilarious? Let's go to Nicola, who's got SPR. I'm glad you brought this one up. This one still looks amazing, along with Droneshield. This is probably one of my best picks that I think I've given you this year. So hopefully people are still on it. You haven't had a reason to get out, have you? I think maybe here, if you really squinted, there was a minus 1/3, but not more than that. Jeez, ladies and gentlemen, give Carl a pat on the back for this whole minus 1/3 thing, right? I mean, if you do like most people and just, oh, I'm scared, and you jump out, and then like you shit a brick the next day or the next week when it just keeps going up because this stuff keeps going up. How good is minus 1/3, right? From Nicola, have been holding SPR and took some profit at $1. Yeah, okay, fair enough. I agree. I agree on this day here. So this is really important. I agree on this day here. So it got to $1. So that's the day you're taking a third profit. If you didn't do it on that day, don't go, oh, I forgot to do it. I better do it now because I'm getting all nervous and I take some profits. No, if you've been to $1, $1 now is not a surprise. So don't do it the next time it gets there. Now we're pushing through $1. If anything, you're adding it back, Nicola, at that point because you go, oh well, I took some precautions. Turns out didn't need it. Better get back, better get the risk back in it. Still holding some. Yes, I agree, but think I need to top this up. Well, I kind of just answered your question. As it's doing a rocket emoji. It is. Today's candle could have been a little bit better, but it's still fine for me. If you get where I'm going, go back a couple of steps. I think you're adding really on that candle there rather than this candle here, but I don't mind. It's a little bit away from the light green zone. Maybe wait for a DINK. Just wait for a DINK because that last candle's got a little bit of indecision in it. Maybe I'm being too picky. Wait for the next DINK and then go for it. And I think what we're going to find is that $1 now starts to act as demand. Okay, and that's when you can have another nibble on it. Until then, just enjoy the fact it's going up. That's how I would play it. Let's just type FRP on here for now. Let's go to Jackie, who's got CHC. Is it a Ethereum play? Yeah, I think, look, it is. And again, this is one which I would have said not that long ago I felt was a short because it was breaking through that long-term trend ribbon. It broke through this key point of demand here. And then, you don't know the future. Interest rates tanked. I showed you that chart, and property trusts do that. I like these. I like sharp rallies I'd like it if it was happening on more volume. I think I know there's supply in the system. How do I know there's supply in the system? We'll look at what we had. So really, we want to remove that supply. This could be just a bit of short covering. I'm not sure yet how serious it is. So where do we go? We know we're going to look at sort of an area like that. There's an area like that. Look, there's a bit of stuff that needs to happen here, not the least being the famous DINK. And I think if we get a really nice DINK there, a little bit of a pullback, lower shadow, another white candle, I think that's when I'll be more comfortable doing it, only because we really don't know how much supply is going to come out from here yet. Okay, so if we see big black candles in here, I want to wait. I want to see what supply comes out there, and if there isn't any, then I feel more confident. And then the next stage is tradecraft, right? Which is, well, even if I do get what I want to see here, how much upside is there before I get to this next level? And are there going to be better setups with just an easier run? And you probably will find it. I mean, if you like CHC for whatever reason, you think it's a Rogue One business or all that sort of stuff, go for it. It's probably not for me right now, but I agree with your assessment that it is a turnaround play, yes. Araju is SNT. Oh, okay. Well, this is a great segue from here's your big move up. It doesn't look like there's much volume, but if you zoom in, you probably will see there's a bit of volume. Yeah, there is, because we have to get rid of the scale issue on this one, whatever special crossing, whatever it is. Sitara, never heard of it, but I do like this one. So this is more of a, it's obviously a turnaround play. It's a higher risk. It's a small stock. It's punting money. It's fun money. It's good time money. But yes, absolutely for me, FRP if I've got it. FRP, and yes, I'm plus 1/3 on this one. I think yes, it's there's enough demand in the system to tell me that there's interest here. There's interest and momentum, and that's where I want to be operating. But I'm going to these things eyes wide open. I'm not going to make this the cornerstone of my superannuation fund, if you know what I mean. DXN. Look at Ditto. Maybe not as powerful as the last one, but still very, very good. The volume here is very impressive. We've got interest, at least we do have that. I'm next white candle on this one. So next white candle, high close, I can go plus 1/3. There's not enough of a signal in there right now. But white candle, high close, plus 1/3 for me on that one. So let me just put that like that. We are at the bottom of the list. I'm going to head back up the list doing US stocks now. Okay, so let's head over to our trading view screen, which is over here. And Matthew has, there we go. Matthew has for us AXLS and I need to double AXLS. Yes, definitely. Let's go all. Maybe you've got a bit of a typo there, Matthew, so try again for me. Let me know, but let's do your next one while you're working on that. IESC, we've definitely got a hit on that one. Yes, turnaround play. What did we say? Minus 2/3 on a close beneath, or we said plus 2/3, sorry, remaining, because that would have been a minus 1/3 on that candle. To be fair, that's probably a minus 1/3 on that candle. That would have happened after the last time we assessed this one, is my suggestion. And then we said on a close beneath this arrow here, which is that one there. That's visual order, bring that to front. You would have been out. So plus 2/3 and then out a minus 1/3. That's interesting. It must have been before this candle, because I think you're all out, certainly by this candle here. Okay, that's history, but I always like to follow things up. Now I think it's looking better. Certainly that candle there, I'd be happy with. I would have been plus 1/3 on that candle as a turnaround play. Yes, I can see it. Absolutely for you, Matthew. Yes. Today's candle is I don't think you need to do anything just yet. So just waiting for next white candle. High close on this one. I don't want to get in too much closer though to this big point of supply. That is a major. That's a proper point of supply. Okay, and we need to fear that one a little bit. Be a little bit afraid of that one. So I don't want to leave it too close to get in to that level, because I won't have enough reward to risk. But assuming you got in on that candle, I think you're hunky dory. Okay, so FRP if I had it. PRIM, Primoris. which, let's go here. Similar candles, aren't they? I mean, I can kind of see what you're going for there. Today, less need, less urgency, that's the word I'm looking for, and just probably waiting on a DINK, any sort of lower shadow that comes back in here and points down towards that short-term trend ribbon, which hopefully will start to act as demand now. High close on the candle, then I can entertain that idea. But I'm more, again, it's a similar setup in that it's moved into that very clear medium-term downtrend. And therefore it forms this as a major point of supply, which really, as I said on the last one, needs to be taken very seriously. I think we're going to find better setups than this. I'm guessing maybe this is something you're on, you're in, you're trying to maybe extricate yourself from. Happy to hold at this stage, but again, being very mindful of what could happen up there, looking for the signals to take us out. ACLS, there we go, ACLS. No worries at all. I can see why you made the mistake with the X in the title there. And this is not an ideal candle, is it? Let's go zoom normal here. I'll get a bit of a bigger picture. Definitely, again, that turnaround play. It's tough. I mean, is that a species ending event? It wasn't a huge amount of volume on that day. I know we'll see volatility on that day, but well, we're in the wrong place now. ACLS. That's what happens when you change templates in TradingView. There's the volatility I was expecting to see. Yeah, look, I think with that black candle, and I think with the price action on this last candle, really saying that the demand side has taken a serious blow and they were unable to recover from it. I think that's what this last candle is saying. I think as a precautionary measure, I would go at least minus 1/3 on this one. I would certainly be looking at a close beneath this little trough here as another minus third, and certainly sort of beneath that trend ribbon as another third, looking at a path out of this one. Do I think you need to go more than a third at this stage? It's a pretty serious candle. I'd go a third and then be very, very, very vigilant on the final 2/3. Let's go up the list again. We're going to go to Perry, who's got ADMA, ADMA Biologics, and Roscoe. You actually came up with this one as well, didn't you? Tremendous. Last time we looked at it was on the gap. I said plus 1/3, and I said I'm pretty sure I said something along the lines of, because I say this all the time, if it bothers you, if you feel you can't buy it because it's gone up a lot, only buy a sixth. But buy something. Buy enough to get some skin in the game, if only to prove to yourself that every time you buy these things, you don't lose, right? Because I know your mentality is, Carl, every time I buy something that looks like that, it goes straight down. And that's why I said, look, just get some money on it just to prove to yourself that it doesn't happen every time. I know you remember the ones where it happened, but it doesn't happen every time. FRP, full risk position, plus 1/3 if you don't have it. And really, this is just trend following. This is the way it works, isn't it? And there are other opportunities between the last time we commented on it and that one. And that's why I do like to save these away, because it's really nice to come back and see charts like that. Thank you, Perry. Happy with that one. USLM, which is United States Lyman Minerals. Great name, Lyman Minerals. Obviously a construction company, right? It's just so specific. Lime and minerals. And that's the beauty of the American market. So many stocks. There's a stock that does something, right? And if it's that something's time to shine, it's going to look good. And it is Lyman Minerals' time to shine, ladies and gentlemen. So happy with that one. I can't fault it. I'm going to look out the corner of my eye, but I don't expect I'll see anything, and I'm not seeing anything that looks even better on the weekly chart. So a very happy FRP on this one. And plus 1/3 if you don't have it, that's a big white candle. I love big white candles. I like to buy them. There we go. Let's go, let's save that away. Let's go to Perry's third one, which is RCL. Royal Caribbean, yeah, very people going back on holidays, going back on cruise ships. How about that? Never would have thought that possible. But there's a big demographic play, isn't it? I'm going to look out the corner of my eye before I type that in. So let's go to the 1 week chart, and we can't see anything there, and it's all good. So FRP plus 130. If you've just booked one of these cruises, maybe you should think about buying some shares in the company instead of just, shelling over all your dough there. Happy with all three of those. Thanks, Perry. Let's go to offline request before I forget. Sean. Actually, Sean had ADMA, and Jason had ADMA, and Perry had ADMA. So there you go. What does that tell you when three great minds are thinking alike? Roscoe, not to say that he's not a great mind. He didn't have ADMA. I'm mistaken. He had PAAS. And that one looks pretty good too. Can't fault it. Obviously, silver stock here, Pan American Silver, as the name suggests. Let's have a look out the corner of our eye and see what we can see. Actually, that looks really good as a turnaround play on the weekly chart. These are just candles, aren't they? Weekly, daily, you see these patterns. They're just patterns I'm trying to teach you. And we push. Actually, you look at this. Look at the DINK, ladies and gentlemen. There's a DINK there. Can you see the DINK here at the trend ribbon? I like to see DINKs at points of supply. I want to see how the supply side responds. I want to see how the demand side responds, okay? That's a DINK. There's another DINK here, but that's just the importance of it. We're going to see it. There's got to be a better word for it, but maybe somebody will suggest it for me. But it is a turnaround play on the weekly chart. Now, it's got to look like something different on the daily chart, but I think we're seeing something that validates itself here, and happy with that one. Look, the last candle isn't ideal. I could certainly go FRP. The last candle's not a deal breaker at all, but I just need to see, next white candle, isn't it? White candle high close plus 1/3. On that one, I've got a J in there for some reason. Let's do that. And let's put that under there, and let's go save and keep moving. And AEM, which is Agnico Eagle Mines. Okay, so another, it's gold and copper, I think this one, Roscoe. Looks great. Obviously, we started off today talking about how good gold looks, the metal. More of a turnaround play, and this is fine because that's a point of supply, and this is closing close enough to them. It's all good. Having said, yes, that's what this week hasn't started yet, so that is correct. That's a weekly close, so happy there, and I think this is fine up to here. So nothing at all worrying me on the weekly chart. If anything, it looks very good, and that looks very good there. So yes, happy to go FRP here, and plus 1/3 because that last candle certainly warrants it. Let's do that. And going to SMCI for Craig. Super Microcomputer, which I'm pretty sure is one of those top stocks in the Russell 2000. Looks fine. Doesn't look as good as a lot of the stocks we've looked at today because it really is kind of stuck, isn't it? It's really stagnating in a range. The candles are small. The shadows are pointing out both directions. It's really screaming indecision here. It's not one that if I had it, or I'd be really thinking about whether I've got the temperament and the patience to stay with it if I did have it. So I don't think I'm going to write FRP on this one. Not because it looks bad, just because it looks boring. So I'm just going to go pass on this one. Again, it doesn't look bad. Some white candles pushing into 1,000. It's got to start to look good again. But when that occurs, it's our job to see it when it does. So I don't think we need to do a whole lot on it right now. Jason also had BCOW, which obviously I'm typing it in, which is not what I want to do. Let's escape BCOW, which is 1895 Bank Corp of Wisconsin. A little bit sketchy, so obviously a less liquid share. You can see down the bottom volume, we're talking in tens of thousands here, not millions. Doesn't mean these little ones can't move, but yeah, there could be the odd candle that goes a long way in the way you didn't want it, with very little sort of volume and depth between you and your stop losses. Sometimes can create issues. Look, there's really nothing there to suggest that I can't do it if I wanted to do it. There is a bit of a level there around about $10. Obviously, that was a big point of demand in the past. It could act as a point of supply in the future. Keep that in mind. I'm not sure if this is the strongest setup we've seen. It's a turnaround setup. Don't get me wrong. It meets the criteria for that. But just given the sketchiness, it probably gets downgraded. So if I had to give a score out of 10, if it was all clean candles and lots of volume, as a turnaround setup, it's like a 9 out of 10. I'm probably going to drop it down to maybe 7, 7.5 out of 10 just because of the lack of liquidity there. But otherwise, look, I'm fine. Don't get me wrong. I don't want to confuse the issue here. If there's something about this you like, plus 1/3 FRP, it's fine. So it's all good here. Let me save that away. And then we've got RNA from Sean. Sean also had, the ADMA with the other gentleman. A very strong chart, no complaints. Let me go back to the weekly chart to see if there's anything sinister going on there. It isn't. That's all the data we have, so very happy with it. And look, even that last candle I'm not too concerned about, so I'm going to go FRP plus 1/3 on this one. The trend is too strong to be mucking around with, just waiting for another candle on that. That last candle's fine. Let's go to GoDaddy, GDDY, and I think Sean said he's already on all of these from memory in his email and doing quite well. Just want to get an update. Obviously, we said plus 1/3 that time, so we're just going to copy and paste that over. That's trend following, ladies and gentlemen. If you can copy and paste that sort of stuff, then something's going right. Happy with that one. Thanks, Sean. That's all the offline requests. Going to head back up this online request list now. I've done Perry's. I've done those Aussie ones. I'm going to go to James, who's got JMIA. Yes, Jumia. Yeah, it's good. It's had a bit of a run, and that's the only problem, if you could call it that. Just a long way away from the light green zone. But that looks like it's just getting started, and that is a closed week. If we were at Tuesday and that was the weekly chart, I'd have to discount that last candle. It's not. We're looking at Friday's candle close, so that's fine. I could add risk just on the basis of that weekly chart and then just trade it on the weekly chart. I'm only looking at once a week. But yeah, I mean, don't get me wrong, I can add risk on the daily chart as well. The only thing I would say is it's a little bit of a ways away from my light green zone. Maybe if you prefer, plus 1/6, I think you have to add some risk. It's just a question of how much you add, how much you're comfortable in adding. Okay, so there we go. Save and escape. Okay, let's go to, always lose my place. I need to maybe highlight. There we go. Why don't we highlight that? And we go here. See that works. CRPB. You learn something new every day. CRPB. 100%. Corbus Pharma. I'm not seeing it here. I'm not seeing it there. Maybe it's a misprint. So let's try Corbus. CRBP. You've got the P and the B around the wrong way, James. But it looks very good. No complaints. Let's go to the weekly chart. Happy with it there. Again, it looks like it's just getting started. And I've gone to the monthly chart. No complaints there either. Not where I meant to go. Yeah, I'm not worried about that shadow. Maybe $60 is having a bit of an influence there, but I'm not worried about it all. That's fine. I think it's one of those, again, just like the last one. I think you want to have some skin on the game because there's that upside volatility about it. Look at that, even that last little volatility bar there. Save. Very happy with that one. No complaints at all. Thanks, James. I know where to look now because I've highlighted it over here. Let's go to Michael, who's got LNTH. Damn it. LNTH. You can tell we're getting to the end of the session when I'm typing all over the place. Ditto for me. We're in America, right? We're in America when we're seeing moves like this. Oh, man, smash through 100 like it wasn't there. 120. I'm going to go ditto, and I know it's frightening. And maybe it's a 6th, maybe it's a 9th. I don't know. $50, whatever it is that you can tolerate. But I'm compelled to do this, so I have to do it. It's the model. It's a picture of excess demand. And the comment here is, hi Carl, if you have time, can we look at US stock LNTH? It went up 57% last week. Is it time to reduce risk? No. No, absolutely. Well, that's easy. That's an easy question to answer. No. Why would you reduce risk on that? It's amazing. Plus 1/3. If your analysis is to add risk, then no, you shouldn't reduce risk. Just show me what in that chart is telling you to reduce risk. Bring it back to demand supply. Show me what in that chart is telling you that people are nervous. You're nervous. No one else is nervous. Let's go to, don't worry, I have highlighted, but there's just a lot of Aussie ones in between. Here we go, Nicola, NRIX. NRIX. I think we're nearly there, everybody. So, oh God, here we go. Click on that, NRIX. Nurix Therapeutics. Oh, magic. Oh, love it. Let's do this. Let's go look out the corner of my eye. I'm not worried about that. There's a little bit of a level there. Remember we saw that one before, that 170 and 170 perfect match. No, I mean that's probably more the level. There's a level there, but no, we're white candle into it. I don't think we're worried about it. So happy with that one, and it just looks perfect. I mean, it's this perfection exemplified here. So FRP plus 1/3. Thank you, Nicola, for that one. Looks brilliant. There we go. And the next one is RZLT, which is resolute. Nice spelling. I don't mind this one at all either, actually. I mean, I like big white candles. That's a nice candle. The gap here does concern me. This is a point of supply. I don't want it's a point of supply because we came down pretty hard there. Short-term uptrend ribbon did its work. These peaks here did their work. Demand came back in. Look, that's encouraging. Yeah, I'm okay with it. It's more of a turnaround play, but no, look, I'm more than okay. I think this is good too. So happy with that one also. And when I say, I don't say these words flippantly. I'd be happy to put my money on any of these ones. I put plus 1/3 on. If you feel it's too high, I don't think this one's too high. This one's the opposite of too high, right? It's just had a pullback. But if you feel the other ones are too high, just put a little bit on. And we've done Ethereum, we've done Area. I think we're good. We're there. Last chance, forever hold your peace. If you've got a comment or something like that, maybe not a stock. Winky Dink. What does Winky Dink mean? Well, I think we're good. In the absence of any further comments or questions, let us then head back to the PowerPoint and remind everybody that everything we've discussed tonight is general information, has not taken into account your personal financial circumstances or particular needs. So before acting upon any of that general information, consider it carefully or seek the help of a financial professional to assess its appropriateness for you. Trading is risky. You could lose money. It's always you that makes your decisions, not me. On that note, ladies and gentlemen, it has been an absolute pleasure chatting with you this evening. All the best for your trading. Until we catch up again, keep calm, and follow the trend. Bye-bye.